Oh, look at us. We're all up there. What a good looking bunch. All right. All right. I guess everybody on now, Chris? All right. With that, I welcome everybody to the special board meeting of the Indian Wells Valley Water District, Tuesday, March 24th. And I'm calling the meetings to order at 3 p.m. And Chuck, could you lead us into pledge, please? Thank you.
Repeat after me. I pledge allegiance
to the flag of the United States of America
and to
and
the
to the republic
which
for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please.
President Kaczynski,
Present.
Vice President St. Amon,
Here.
Director Griffin,
Here.
Director Rotora,
Here.
Director Boyd.
Here. Thank you. Posting the agenda declaration.
The agenda for today's special board meeting was posted on Monday, March 23rd, 2026.
Thank you. And conflict of interest declarations.
President Kaczynski,
None.
Vice President St. Amon,
None.
Director Griffin,
I will be abstaining from the closed session item on employee general manager.
Director Rotora,
None.
Director Boyd.
None.
Thank you. Public questions and comments. This portion of the meeting is reserved for persons desired to address the board on any matter not on the agenda and over which the board has jurisdiction. However, no action may be taken by the board of directors on any item not appearing on the agenda. Non-agenda speakers are asked to limit their presentation to 5 minutes. Public questions and comments on items listed on the agenda will be accepted at the time the item is brought forth for consideration by the board. When you're recognized by a chairperson, please state your name. Are there any public online that have any comments before we get started? No hands getting raised over there, Chris, yet? Nothing? Okay. So with that, we'll move into the presentation by C.J. Brown and Associates, our audit report. And I guess I'll turn it over to you, Ty. From here, we'll move ahead.
Sure. Today with us on Zoom, we have Chris Brown of C.J. Brown and Associates CPA, or Brown and Company CPAs, who are our financial auditors. So here we are with the annual audit financial statements, and I'll turn it over to Chris.
All right, thank you very much, Ty. I assume that there's the presentation up on the board. I think I see it there.
Yes, we'll move slides when you let us know.
Okay, sounds good. All right, well, thank you once again. Named Chris Brown, going over the June 30th, 2025 audit. Go ahead and advance the slide. Okay, just a little housekeeping here, what the audit is. Probably remember hearing me say this from previous meetings, but the audit was performed in accordance with auditing standards generally accepted in the United States of America. These are the rules that the auditors must follow when we're conducting an audit. We are audited ourselves, and we are held to these standards. Number of engagements are selected, and they make sure that we're actually following that guidance. As far as the audit itself, broken up into several different sections. Initially, as we're assessing the district's internal controls by sample testing, interviews, and review of policies and procedures. From that, we develop our audit programs and determine our risk, of course. Once your fiscal year ends, we obtain your general ledger, trial balance. And the audit itself is essentially tying in the numbers that you represent in your general ledger into the supporting documentation. So, the cash, the receivables, the capital asset activity, the debt, all that sort of stuff. So we're going through your balance sheet essentially and tying the numbers in. We're also performing analysis of key relationships within the financial statements or your general ledger itself. So kind of the big picture, that's what an audit is, okay? Go ahead and go to the next slide. Okay, so There are two documents that come out of the engagement, one being the financial statements, the other one being the management report. Within the financial statement is the auditor's opinion, and we're providing a unmodified opinion. And this isn't exactly word for word what's in the financial statement, but this paragraph closely mirrors it. Actually, the audit opinion is like 2 or 3 pages, but in essence, it says, in our opinion, the financial statements referred to above present fairly in all material respects the financial position of the Indian Wells Valley Water District as of June 30th, 2025. So congratulations on a clean opinion. The other document that I referred to, go ahead and go to the next slide. The other document I referred to is the management report, and that is our communication to you, the board. You are our boss. It is your best interest we have in mind when we're conducting the audit, and we report to you. And the management report gives us the opportunity to bring anything that comes to our attention that we feel needs to be elevated to that level. It discusses what our responsibilities are. If there are any potential deficiencies or weaknesses, I'm happy to say there were none noted. Any particular items with regard to accounting practices, adjustments, difficulties encountered. It's basically what it is. It's a communication to you where we can basically say, you know, this happened, this happened, this is a material item, but I'm happy to say that we did not come across any material items that needed to be brought to your attention. So pretty clean, pretty clean. Go ahead and go to the next slide. Okay. So in 2025, there was a new GASB, Government Accounting Standards Board. That is one of the rule-setting bodies. It's pretty much the main one that governmental entities must adhere to when they're reporting. And number 101 has to do with compensated absences. Compensated absences being, you know, vacation, sick time, any other kind of items along those lines. And what has been determined is that there was the need to have a unifying rule, so everybody would report similarly. So similar size organizations, similar complexities, similar levels would report essentially the same type of information. Of course, it's going to vary due to the size of the organization. But what we have underlined here is really kind of the meat and potatoes of the whole thing. It's achieved by aligning recognition and measurement guidance under a unified model. So basically, everybody must follow this one unified model. It's pretty straightforward. I think it's a good idea because we've seen variance amongst different clients and how they approach reporting their vacation and sick time and such. And what has been required with any sort of GASB pronouncement of this nature is it requires the district to look back. So for any year that is presented in your financial statement, and there's going to be 2 years, there's 25 and 2024, and I believe we have 2023 shown in the management's discussion and analysis section. So for all those years, it's required that you go back and restate your financial statements to reflect as if you'd always been preparing your financial statements this way, okay? As a result, the district has restated net position in the prior years. Total adjustment to net position was 110,000. It was decrease in your net position, I should say, of 110,708. So it's pretty minor. It sounds like a big number, but for an organization the size of yours, that's pretty small. What that says is that you were pretty much already in alignment with what the guidance was going to require. So that went off pretty good. So go ahead and go to the next slide. Okay. And what we have here is the condensed statements of net position. This table is in the forward section of your financial statement, and it's assets and liabilities and such. And I'll just kind of go over quickly this section. We'll spend a little bit more time in the next section. But we can see total assets actually decreased about approximately about 1,078,000. Big component of that, of course, of the activity within the asset section is going to be use of cash for construction of assets. So, we see approximately 6 million decrease in current assets. Good portion of that was utilized in capital additions, building things. We can see the increase in capital assets. You see the effect of building items and putting them in play. Deferred outflows of resources. This line item and the one below, the deferred inflows of resources, this has to do with the time difference in the way that your OPEB and your pension liability are calculated and timed along with the actuarial valuations. There's a 2-year difference between when the actuarials are prepared and when you report. These numbers are rolled forward year to year, but there's this time delay. Due to the complexity of actually preparing a actuarial valuation, it would be probably impossible without the investment of huge amounts of resources by the state and such to provide you with an actuarial valuation that you can use in real time. So they've opted for this delayed mechanism. And what you see in deferred outflows and deferred inflows relate to amounts that will be applied in future years, in the next couple of years. So it looks pretty straightforward from an audit perspective. With regard to the liabilities, we see went down approximately 3.8 million. Current liabilities, the big change there was unearned revenues that were recognized in 2025. So really nothing unusual there. Net position is what's left over. It's kind of like your net worth. It's broken into 3 constituent parts, being what you've invested in your capital assets, net of depreciation, and debt outstanding on building those assets. So as you pay down debt on building those assets and you depreciate the capital assets over the years, that number changes over time. Restricted relates to cash that there are requirements from the third party, like somebody you borrowed it from, or grantors and things like that. That money is be used for a particular purpose, so that it's considered restricted, and it goes in this line item there. Nothing unusual there. Unrestricted is essentially just what's left over. It's not it doesn't represent cash. It's just the math of the assets minus your liabilities, minus what you've invested in capital assets, and minus what's restricted. Pretty straightforward there. These numbers are going to vary from year to year. I tend to like to see what I call an improvement on unrestricted from year to year, but you built a lot of assets in the past couple of years. So this change is what I would expect. So it looks perfectly normal to me. Let's go ahead and go to the next slide. Just so I can see, is there a slide after this one? Can you go to that one just so I can see what it looks like? Okay, perfect. Let's start with that slide. Let's start with where you're at right now, and I'll have you fold back in just a second. So what we have here is a narrative of what happened on your profit and loss statement. And we'll go through it in 2 parts. So I'm not throwing a million numbers at you all at once. So I'll go through the narrative, then we'll go back to the table. Okay. So big picture is that net position for the year. That's kind of like your net income. It increased about 6%, or 2.2 million to the 39 million and change, due to a decrease of 1,098,000 from ongoing operations, and I'll show you that in just a moment, offset by capital contributions of 3.3 million. So the total of the loss on operations and the capital contribution, they all tie together, and it's that 2.272 million increase in net position. Okay. Now, what makes up the revenue side of this is operating revenues, or what you do for a living, and non-operating revenues, which are ancillary items. So Total revenues increased 1.8 million. On the operating revenue side, it increased 1.9 million due to increases of 626,000 in zone charges, 614,000 in water consumption sales, 503,000 in ready to serve charges. I'm going to leave it there and we'll go to a table in just a moment. Non-operating revenues decreased 117,000, primarily due to a decrease of 121,000 investment earnings. Now go ahead and go back one slide. And let me catch up with you here. All right. I'm looking at the same table here. I can't see what you guys see there. I just see the very bottom of that table. So I have a cheat sheet here in front of me. But with regard to the, like I said, the revenue side, here again, we can see total revenues, top area, up 1.8 million. And again, we can see that the operating revenue side of it was up 1.9 million, non-operating side down approximately 117,000. Go ahead and go back to that narrative page again. Okay, so on the expense side of things, total expenses increased by 1.8 million. On the operating side, we saw an increase of 1.7 million, primarily due to an increase of 1.3 million in general and administrative, 217,000 in water supply, smaller items, 62,000 customer service, 60,000 in engineering, 60,000 in transmission and distribution. So we saw that across the board there. Depreciation expense, there again, you're adding assets and you're depreciating it over the useful life of that asset. It increased by 172,000, primarily due to what you transferred into from construction in progress into depreciable assets. So makes perfect sense there. Non-operating expenses decreased 71,000 due to debt service costs, essentially, offset by an increase in interest expense related to long-term debt. I'll just go ahead and add this in and then we'll go to the next slide. Capital contributions, we saw a $3 million increase from state and 111,000 in capital facilities fees, offset by a minor decrease of 57,000 in capital contributions and from developers and 50,000 from local sources. So go ahead and go to that next slide again. Oh, go back. I'm sorry, I made you go the wrong way. There you go. All right, I've just been throwing all kinds of numbers at you, and I'm sorry about that. But there again, we're seeing the expense portion is right in the middle of the page. We can see operating expenses down up approximately that 1.7, depreciation and amortization that 172,000, non-operating expense decrease of 71,000. Work our way down a little bit more. Capital contributions, pretty significant jump there from the prior year, up approximately 3 million. So there again, doing the math, revenues minus our expenses plus capital contributions, we saw net loss before capital contributions of the 1,098,000. That's just basically offsetting your operating, non-operating revenues, expenses, and then of course we saw the addition of the 3,371,000 in capital contributions. Again, bottom line, changes in net position, 2,272,770. So it's positive year. Net position at the end of the year was the 39,581,000. So I just threw a million numbers at you. But as we can see from this, pretty straightforward. Big items is, of course, you were building significant number of assets and capitalizing them. That was really a big portion of your activity during the year. And of course, the capital contribution was a significant addition to your bottom line. So kind of wrap it up. The audit went well. Hats off to everybody in the finance department. Thank you, Ty, everybody involved there. Jeff Palmer, unfortunately, he was unable to be at this meeting. He was the supervisor involved. He extends his thanks to everybody. He said it went exceptionally well. We were able to provide you with a clean opinion, no material weakness, And of course, we just went over the results of your operations for the year ended June 30th, 2025. And I will turn it back to you.
Thank you. So are there any questions, any comments from the board? Anything that, Ty, anything you want to offer or answer, or I shouldn't say answer, but explain anything?
Not for this. I think we're on a positive trajectory. You can see why we went with the rates that we did to kind of build back up. We've been spending money on capital and we need to build back up those reserves, and this is what
Okay,
you'll see.
all right. Any questions from the board? Yes, sir, Mr. Boyd.
Yeah, thank you, Chris. That was a great brief, nice, concise. Like I say, lots of numbers, actually millions of numbers in there.
Yes.
Not everybody in the valley here does audits regularly and on schedule, as we've been exposed to some of our partners. I have just a general question, because I don't fully understand this term. We've heard the term of a forensic audit, and I don't think this is a forensic audit, but what would a forensic audit provide us that a normal audit does not provide?
Okay, so standard audit, I'll call this a standard audit of the financial statement. So this, you might look at this as a general audit of your entire financial statement. We take a look at your internal controls. We evaluate multiple things. A forensic audit is going to be a very specific fraud type of, typically a fraud audit. Okay, so typically starts with an issue where somebody will say, okay, there's something that I'm not sure about, or we want to verify. It's not always fraud. It could be a situation where somebody wants to verify a balance that, for whatever reason, is somewhat occult. There are certain things about it that just don't make sense or are not unknown. And a forensic audit is typically kind of a laser-pointed audit on whatever that particular issue is, and it goes into much greater detail as far as looking at the transactions involved with that particular matter. As far as your situation, I'll take it one step further. I'm kind of reading into this a little bit. You would not necessarily be interested in a forensic audit of your financial statements because, number one, it's not really required. Number two, it would be hugely expensive. So there again, and forgive me if I'm extending this to a thought that maybe didn't exist, but two totally different things. A general audit would be, for what we're doing here, forensic audit would be somebody has identified something and they need some very, very deep, specific answers that aren't obvious, and it requires a lot of digging, possibly into other sources other than what the district could provide.
Okay. Would that normally be easy to determine from a regular audit like this, if something like that was required? And no, I'm not implying that we need to subject ourselves to a forensic audit, but I have some issues with others' audits that we've been exposed to in the past.
Okay, so I'm going to throw out some generalizations here. I have no idea, what you may be referring to, but I'll give you a situation. I'll give you kind of everyday life sort of thing. So if you have two people that are in a business, okay, and they're business partners, and one partner is wondering where all the money is going, he might ask to have a forensic audit done of their business to see if his partner may be embezzling funds. Sometimes with marriages, sometimes forensic audits are done. To get back to your original question, yes, it would be easy to identify a situation where you really need to go into a forensic audit, and it would be a situation where the information just isn't there, or the explanations don't make any sense, and you need a professional to come in and do extensive interviews and reviews of detailed information. And again, it might involve deep look into financial records, bank records, bank institution records, legal items. So kind of get back to your original question. Yeah, it would be pretty easy to identify whether you need that or not.
All right, thank you very much.
And I'll add this, if you're ever interested in it and if you want to talk about it, we don't do them ourselves, but I would be more than happy to talk about it and say, yes, no, and this might be the place to go. So
I'm going to expand just a little bit. If you had pools of money that were restricted for what they could be expended on, would a forensic audit look at invoicing that was taking place to see if they were charged at a proper place?
that would be a part of it, but I would say probably the better type of engagement. I'm going to steer you in another direction, and forgive me. I think in that sort of situation, an engagement called an agreed upon procedure would be probably better. An agreed upon procedure, and I'm going to make up a scenario here. So somebody on the board believes, okay, oh no, let me take that out of the equation. Let's don't even go down that. Let's just say the district as a whole wants to make sure that amounts related to a particular revenue source were properly billed using the correct rates. And you want to make sure that it was done timely and it was all put in the correct place and utilized in the proper way. That would be an agreed upon procedure where an auditor will come in, look at that one revenue source for whatever period of time it is determined that it needed to be calculated, go back, look at every invoice, look at all the documentation that would support that invoice, rates, things like that, and just basically just nuts and bolts all the way through that. And then, the other side of it, the application of those revenues. That's an agreed upon procedure that is much more cost effective and is really dealing with that kind of a scenario.
Thank you, Chris, for the education of us all. We were just trying to understand the difference between them all. Like I think that Director Boyd said, I don't think we're contemplating anything like that for a district, but we deal with others that we need to understand what this means. So thank you very much. Any other questions from the board about the particular audit? Stan, anything?
None here.
Nothing from Stan?
I just have a quick question, Chris. I appreciate you doing this for us, and it looks like to me that we're gaining assets, our revenue income is good. So this should help us maintain our credit rating, correct? Or even maybe lift it up a little bit now?
I didn't really quite look at it from that perspective.
I can comment on that because
Yeah, go ahead and jump in while I kind of take a look at things. Maybe I can add something at the end there.
Because I did send our draft copy of this to S&P when they were evaluating it, saying it's audited, but it's not finalized. And so they did take that into consideration, which means they did not lower our credit rate because
Okay,
of
good.
this. If we were to build up our reserves more, I'm sure we could push that up into a higher rating.
Okay,
Thank you.
thank you.
Do you want my 2 cents on this?
Yes.
Okay, so of course, any rating agency is going to take a look at, number one, the revenue sources and the expenses. They're going to look at your rate structure and with a mind towards, do your rates cover the cost of supplying that service? So that's what they're really looking at. So of course, they're going to look at debt. They're going to look at timeliness of payment. They're going to look for any legal issues, and they're looking at your operating revenue, operating expense side of things in order to calculate debt service. So those are the kinds of things that they're looking at. You look pretty solid. Ty just said they did not change your credit rating, so apparently they see what they're looking for. So,
Okay,
Thank you.
thank you. Anything else from the board or the staff before I go to the public?
Other than thanks, Ty, looks like you've been doing a good job.
Yeah.
We were all suspicious, but
It's a group effort. It really is.
Yeah.
There's a lot of
imagine.
people in this office who add.
A lot of nuts and bolts to this. Yeah, absolutely.
Hats off to all of you.
All right. So any comments or questions from the public? Do I have any out there, Chris, at the moment? Okay, there we go. Renee, are you Are you there and off mute?
Yes,
Okay,
yes, I'm there. I'm here.
okay.
Okay, I just want to ask CJ and Brown CPA firm, is the main purpose of doing these audits just to show like what the district is spending their money on and what their revenues and to make sure they're using good accounting practices?
Yes, that's not all that's involved. So from a compliance or legal side of things, all governmental entities, unless they are provided an exemption, which is rare, are required to have an annual audit, which gets submitted to the state controller's office. And so the state controller's office keeps track of the activities of governmental entities. And I'm not going to say that this is why they do it, but one of the kind of the outreaches is they see how taxes are allocated, tax monies and things like that. And that's at the county level as well. So that's what drives most of this is the requirement from the state that an audit be conducted and submitted to the state. There are other good reasons that are somewhat ancillary, but it provides the stakeholders, I would assume you live within the community. It provides you clarity in the district has a fiduciary duty to all their customers, and this provides a higher level of assurance. So the customers can read this and get some comfort that these numbers are truly correct, materially correct, and get some satisfaction or some comfort in that. So it's multiple purposes, but a large part of it is driven by the state's requirements.
So just to follow up on what you said, so the state controller's office will receive a copy of this,
Absolutely.
and it happens every year. Okay.
Yes. Yes.
Okay. All right. Thank you.
You're welcome.
Thank you, Renee. Chris, a quick question. What is the timing requirement on audits? So when you complete your either fiscal or physical year, how long do you have before the state needs to see the completed audit?
It's typically 180 days. I know we're outside of that this year, but we've been in contact with the state, and there's no issues there.
Okay.
But it's typically, I like to see these things done in November or December myself.
Okay.
Yeah, every year it's typically around March when we submit them to the state controller's office, and they give you a hard deadline of April 1st.
Oh, do they?
Usually
Yeah.
they understand it's not all going to get done within 180 days.
And that's based on our fiscal year. If you had a fiscal year ending December 31st, what date would you expect that to be?
So the standing
100
requirement's 180
180
days.
days, okay.
But when they send out their notice that they want our copy of the
Right.
audit, it's so for us, it's April 1st. If you were a physical year, it would be October 1st.
October 1st, okay, got you. All right, thank you. Are there any other questions, either from the board here or from the public? Anything else out there? Nobody, Chris? Nothing? So Ty, before we move on, what do you need do you need a board to approve this as a regular vote or
Just accept it.
just accept it and file?
Mhm.
So I'm asking is, does
I'll make a motion to accept and file.
Second.
thank you. And I'll just say, you can go ahead, girl call. Yeah,
President Kaczynski,
yes.
Vice President St. Amand,
Yes.
Director Griffin.
Yes.
Director Ritora,
Yes.
Director Boyd.
Yes.
Thank you. All right, with that, I guess we're done. Chris, thank you so much for your time and effort. And hope to see you soon. It won't be long. We'll be talking again soon.
We'll be
So,
talking soon. Thank you so much, and you all have an excellent day.
okay, thank you, everybody.
Okay,
Thanks.
bye-bye.
Thank you. What's that? Yeah, I saw him show up. He's probably waiting for us. So with that, we're done with the open session. I'm going to go ahead and adjourn at 3:34. And we're going to go into closed session after, I'll give you guys about 5 minutes or so. And we'll meet again in closed session. Thank you. Thank you so much. I see we have no viewers all of a sudden. So anyway, we're done with closed session, and I'm reopening the open session here at 4:34. So with that, Jim, do you have?
No action taken that requires disclosure under the Brown Act in light of the fact there's no,
All right, thank you so much. And with that, I will go ahead and adjourn this meeting at 4:34 and a half. Thank you, everybody.